world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Fintech superstar David Brear, one of the most prominent thinkers and doers in our industry. David is focused on addressing one of the biggest challenges in banking, driving technological innovation at large incumbent organizations. David Brear is CEO and co-founder of 11FS, a fintech consultancy that helps banks become truly digital. He's also co-host of Fintech Insider, a blockbuster podcast about fintech and financial services. Named among the top 100 most influential fintech leaders of 2016, David's one of the most recognized and influential people in financial services. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. If you like today's show, please subscribe on iTunes or your podcast platform of choice. Thank you very much for joining us today. Please welcome David Brear. David, welcome to Rebank.
Thank you very much for having me.
Describe your work at 11FS.
It's quite a difficult one to describe, really, and to be honest, that's been part of our problem, really, over the last year now, actually, in terms of kind of doing it. We sort of started by giving ourselves a bit of a difficult task. We started 6 companies, really, at the beginning. So it was a research firm, a software company, a consulting firm, an investment fund, a speaking bureau, and a media company at the same time, which it kind of sets pretty high aspirations of what we wanted to achieve. So I think the fun thing is all of that, it kind of works really well together. You know, if we're doing consultancy for somebody who's heard of us through the podcast that we do, or equally from a speaking event, it kind of leads very nicely to investment opportunities, potentially either from a startup perspective or somebody who wants to come in. But really the main thing is that we had a kind of a collective feeling, whether it be from people like Chris Skinner or Jason Bates or Simon Taylor or myself, that the industry has spent a pretty significant amount of money. We've seen billions of pounds kind of pouring into the organization, and actually we kind of feel slightly underwhelmed by what we've seen. So the work that we're doing is really trying to bring about kind of wholesale transformation about the way change is done. And that really allows us to try and help people move away from just doing the standard things with the standard people. Really, if you're going to do it differently, do it really differently. And that's what we're kind of advocating.
I'm sure we'll get into it in a bit more detail. I know that digital transformation at large incumbent organizations is one of your guys' fortes, but maybe just to kick things off, are there any projects you can describe, even if you can't name the institutions involved, kind of the type of work that you guys are helping organizations with? Yeah, sure.
Obviously, I can't kind of go into the names, as it were, in terms of what we're doing. But if you're listening, you know who you are. But the work that we do is surprisingly varied, actually. I think with everybody's kind of background, with sort of mine. From Gartner, from banking, from insurance, and similar with Jason doing startup banks with Starling and Monzo, and Simon's kind of experience at a very large bank like Barclays, and back into his thesis days, etc., and throughout the team on. Then we get asked to do quite varying things. So it could be as kind of as sort of vague as a culture transformation piece in terms of doing things, which we've just been asked for one of the largest European banks to kind of pick up, all the way through to we don't know how to fix this bank, can you build us another one, which is quite exciting. So the work that we're doing is feels meaningful in terms of actually where we're going, and that's why we started the company. It wasn't to have another kind of Me Too consultancy play. It was really to do things differently.
You work with some of the biggest banks in the world. How similar or different are those organizations in the opportunities they see and the challenges they face?
Surprisingly, you can kind of give a bunch of people the same thing to look at and they'll give you a different answer, right? It feels very much like those weird kind of oil drop paintings that psychologists share with people, and actually I think the environment in which that most organizations are dealing with is very different. You'll have HSBC, who is 300,000 people in that organization across 300 locations in terms of the work that they're doing. Those guys are kind of facing very different problems than somebody like Nationwide, who have got most of their employees sitting in the same office. You can literally go and find somebody and kind of talk to them about what they're doing. So, while they're all sort of in the same landscape, then, very much I think the makeup, the history, whether they've been kind of created through mergers and acquisitions, even down to just the sort of culture environment that their leadership very much set for them. So, while everybody's playing football and, football's played by the same rules, then, definitely there's a very different makeup of the teams that are being put forward.
We've discussed the concept of digitization versus digitalization on the podcast in the past. I know that's a big topic for you. I've heard you say that digitization is the biggest failing of the financial services industry. Can you expand on that?
How long you got? Definitely I kind of feel, and presentations that I'm doing at the moment, I very much kind of talk about digitization being the pretty much the magic beans that consultancies have been selling to banking for the last maybe 10 years, really. This concept that you take a very analog basic thing and figure out the best way to digitize that thing really sort of underwhelms me. If you kind of think all of the qualities, all of the capabilities that digital really can bring to the game, and actually just digitizing an analog thing into and bringing that into the banking context doesn't really feel like it sort of does its real service. When you look at probably the few industries that have been ahead of banking in this space, like media, for example, very much we've seen the media industry when they were initially digitizing things like, even digitizing music, right? The idea that you were consuming an album rather than consuming the songs that you wanted to. That didn't work out very well. Similarly, the paper industry, the initial digitized attempts at papers were pretty much just PDFs on an iPad. So at the point where people really start to think about the qualities that digital actually brings to bear, then for me, I think that's actually when you start seeing material shifts in what we're doing. I don't think we've seen that dramatically yet, but there's definitely signs of it.
Your company's tagline is digital banking is 1% finished. That sends a strong message. What's the response of incumbent banks when you tell them that?
It's pretty interesting. And actually, the 1% finish piece for us is it's as much a kind of a mentality as it is a statement, really. We've been using that not just for kind of bravado on slideware, but also even down to our kind of recruitment mechanism in terms of kind of what we're doing. So very much we see within the industry there are people who are definitely we believe it's 99% done. We believe that banking has had its kind of bloom in terms of where it would be going, that the products that were created, 200 to 300 years ago with regards to current accounts and credit and lending kind of are as good as it gets. And that's really what digital brings to banking today is actually just an alternative distribution mechanism. And they're the people who, probably get most upset when they start hearing about the sort of the idea that it's really only sort of 1% finished. On the other side of things, and increasingly we're sort of seeing this, and maybe these are, the initial wave of people who have come and spoken to us really are, the people who are, I think, both slightly underwhelmed at the level of technological adoption that most of the big banking organizations have actually implemented, but equally the abilities of the traditional vendors within this space to actually match that expectation. So there's an interesting sort of perfect storm going. Equally for the sort of challenger banks in this space, there's this perfect storm of tech and regs and all these things kind of moving around. For real sort of wholesale disruption within the vendor landscape that we're really being able to sort of flourish within, it just sort of feels like it was the right time to be doing what we're doing.
So if we're 1% of the way there in terms of digital banking now, what does it look like when we're 30% finished, or when digital banking is 100% finished? What are some of those experiences?
There's probably a few different ways to look at this one. I think the 100% Like I was sort of saying a second ago, really, we sort of believe that this will never be done. This will never be 100% completed. That really the mentality of an ever-changing landscape, whether it be from a technology, whether it be from a regulatory, whether it be from a customer's expectations being set by out of industry things, then 100% will never be achievable. It's about continually evolving. It's about establishing the mindset that change is inevitable in this space in terms of kind of what we're doing. But for the 30%, then actually I kind of think we start to sort of get into what is the future of banking moment. And I kind of think there's so many different opportunities there. And I think particularly in the sort of banking as a platform, banking as a service space, with probably the marketplace banks like Starling and Monzo and these guys kind of sitting in the middle of that. But that's definitely where I see this going, really. We've talked a few times at conferences recently about if you're only selling your products to your customers in the next 5 years, you're probably missing out on quite a big trick. And the idea that, like you say, somebody like a bank as a service platform like Bud can come into the market and create no products themselves, but actually take advantage of wholesale regulatory changes like PSD2 and aggregate all of those things into a unified experience for people. The concept of not having your own products but aggregating them and selling them has worked out pretty well in other industries like obviously Uber and Airbnb and whatnot. So I can kind of see that being where we're going. I think the thing for sure that whether it's 30% or 100%, I think the balance out between the win that the bank gets and the win that the customer gets being much more balanced. The experiences that we've definitely sort of seen in big banks over the last 25 years really has kind of predicated business cases on sort of punitive charges, and I think those business model changes definitely are what we'll start to see, and like I say, bringing about balance with regards to who wins and who loses.
I'm fully on board there with the kind of the potential impact of the marketplace model, the bank as a platform, bank as a service. And it makes sense from the standpoint of some new banks coming to market, like you mentioned, the likes of Starling, Monzo. How do executives at incumbent banks view that? I mean, are they, based on some of the conversations you're having with them, some of the projects you're doing, are they interested in adopting a sort of open architecture marketplace model for themselves, or do they view that as potentially undermining their core business?
You sort of get two camps on this, right? If you look at the catalyst for this potentially being things like PSD2, you get people looking at that regulation as an exercise in keeping your head above the water with regards to what it is that you need to do and the level of change, the level of adoption that you need to do about that. You'll then get the other side of that who are looking at how they really sort of flex. How do we massively take up scale of these opportunities that other people in this industry aren't? So even from executive level, I'm seeing real wholesale appetite for moving and doing things in a different way. Everybody's been quite quiet about what they are and aren't doing so far, but I would suspect over the next 2 to 3 months we're going to start seeing people coming to the front really to say, this is the stall we're setting out with regards to PSD2, whether they're kind of aggregating other people's pieces into it to do interesting things, or whether they're really looking at other data model revenue opportunities to expose more than they said that they have to from a regs perspective. Then it kind of feels like we're probably on a precipice of really interesting things coming to the market. So definitely, I think particularly on the bank as a platform play, then when you start to see the opportunities within a bank where you don't only sell your own products, then this is something that banks have been doing arguably for a long time now. People have passed credit card customers that haven't fitted into their risk bucket kind of up or down the stream, whether it's kind of to somebody like Vanquish or whether it's further up into upselling them into a kind of a premier or a platinum card or whatever it might be. So arguably people are kind of open to doing these things, but the minute you start really sort of scratching the surface on the way that they make money, then the rubber really sort of starts to hit the road.
Well, in terms of stuff actually coming to market, it's certainly going to be interesting over the next few months to see what changes. I think NatWest were in the news just the other day about a new, basically automated small business lending solution, I think up to 150K unsecured for SMEs, online application, automatic credit scored, quick cash disbursement to compete with the likes of some of the peer-to-peer lenders, the alternative sources of finance. So it's not surprising that banks are starting to do things like this. Perhaps a bit surprising why it's taken so long, but there you go.
Usually people don't like to change if you're making enough money out of things until you absolutely have to, right? And I think probably the most amazing thing that's happening in the market as it stands at the moment is the ability to do nothing has massively gone away, hasn't it? You know, all of the heat on the back of their neck from like say fintech players coming into the space, or even from the regulatory space, knowing what other people will do to them with that data that they have to expose. It just sort of feels like it's the funnest time to be doing banking ever, right? So long may it last.
On that note, every organization has a digital strategy. Most have accelerators, incubators, fintech partnership teams, strategic investment funds, et cetera, et cetera. Surely with those programs, they should be on top of the whole digital innovation thing, right?
Yeah, theoretically, right. But I think there's a difference between sort of getting it and sort of spending enough money on it. And I think the lateral I often sort of kind of draw on this one is that with enough money, I could probably buy a sweet guitar and, get Dave Grohl and the Foo Fighters to come around my house and jam, but I would still struggle to play the guitar in any kind of sense, in any strict, and definitely never hold a tune in terms of singing. So, I kind of think you can spend a lot of money, and I see a lot of, large organizations coming out and saying, we've got X billion to spend, we're doing it in this way. But so few of them are really at this stage coming out and saying, we've done this thing and we think it's awesome. And this is what our customers think. Our customers think it's awesome as well. So I think the problem is really that innovation isn't something that can be bought. I think that's the realization. It's very much like creativity. I don't think you can just lock 20 people in a room and give them shiny Macs and be like, okay, guys, innovate, go be creative, and I'll be back at 5 o'clock. It's 2 p.m. now. I'll be back at 5. You guys be creative and I'll come back for some of that innovation stuff. It just doesn't work like that. And I think, where most of the banks are kind of getting hung up is predominantly about that key point, really. It's kind of, when you've got kind of all of the customers and all of the money, you're used to being able to just sort of buy your way out of the problem. And I kind of think even with the levels of money that banks do have at their disposal, if you've got £1 billion to spend, we saw recently RBS wrote off, was it 1.6 billion on the separation of Williams & Glyn to RBS? That is a lot of money. Can you imagine what you could have done with that amount of money? I think Jason was saying we could have started 9 banks with that amount of money in terms of kind of doing it.
Apparently, what you couldn't do is spin out their IT systems.
Well, exactly. So it's kind of a strange. If you keep going about it the way that you've always done it, then you're going to continue to spend billions of pounds doing it. And unfortunately, the results of it are pretty underwhelming. But the organisations that I've seen do this type of thing best are the ones who kind of realise that innovation isn't a few people's job. It isn't kind of a mandate of the cool kids who get a hall pass and don't have to adhere to some of the internal policies and politics. Actually the cool kids are really probably the ones who are going to have to work hardest, because it's their role to facilitate innovation, not to be innovation. I've seen Neil Cross particularly actually at DBS very much kind of echo that ethos in terms of what they're doing, and I think that's why they've been so successful. If you as an employee in a bank suddenly start to feel like, why are those guys getting the cool stuff and I'm getting all the kind of boring things to play with, very much people are going to be shooting down those projects all the way through. That kind of leads to a very much kind of a bad culture mentality in terms of where you'd go with it. And it leads to that too big to succeed rather than too big to fail type scenario, where we've probably got ourselves with a few organizations.
That actually leads nicely into this kind of next point, which was really thinking about different types of innovation, or whether there are different types of innovation. So much emphasis is put on digital innovation, and maybe it's because it's a bit more tangible. It's maybe easier to hire technical talent to help deliver some of that. But arguably, innovation in its broader sense goes far beyond that, and it's really innovating on certainly components of the business model, as we mentioned before, the marketplace, bank as a platform, elements of the culture. I understand that your guys' expertise is around digital innovation, digital transformation. Are there ways that you can support institutions in the cultural pieces as well?
For sure. Yeah, I think it kind of comes down to what you think digital is really. And we've, I've kind of had, I've seen lots of people have lots of arguments about what fintech is, and that's not fintech, you're not fintech, blah, 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 blah. But actually, I kind of think, for me, sort of digital and what sort of fintech is, it's kind of more of a movement, really. I don't see it as the establishment of a digital channel. That's just a real subset of what the activity would be there. But a digital culture, it's about the abilities to sort of move fast. It actually even has reasonably significant impacts on both the operating model and organizational design of an organization. What we've probably seen is investment in digital as a channel at a surface level, which has just really sort of led to it being a kind of another branch. I don't mean a branch as in a physical branch. I mean just another branch of banking. And again, that just does such a massive disservice to what it could be. Digital really should just be the beating heart in the middle of any organization. And from a technical perspective, whether it's serving the branch network or the telephony network or a mobile app, then the services that are being consumed across the piece should be identical. For banks who are really wanting to make very significant changes to their operating costs, then if they don't move to that type of mechanism very soon, then it's going to be incredibly difficult to compete with people.
What can banks learn from each other in the pursuit of innovation? Is it easy to just hire people that did it for one bank and have them do it for yours?
I think a huge amount. I think this is probably one of the biggest untapped things that banks don't do well. Is actually kind of a bit of self-awareness. It's kind of strange. If you look at most industries, there'll be a department that is monitoring competitor activity in terms of where you're going. If you look at tire manufacturers, you'll have people literally kind of climbing walls to look at what Pirelli are doing if you're Dunlop, and vice versa. So, the fact that most banks aren't really paying massive attention to what their competitors are doing, for me, spells basically like wasted opportunity. If you start every project with a blank sheet of paper and not knowing where the best person left off in terms of doing it, then it feels like you're wasting a lot of time and a lot of money from my perspective.
This is a question from the Rebank community. This one comes from Nicholas Brenner, received through our website. What are the key skill sets you've hired for at 11FS based on your view of what's required to deliver change?
That's a really interesting question. We haven't really placed emphasis on one thing because I think, like I said at the top, really we're doing so many things at the moment. So it's very difficult to say, okay, we're going to like triple down on blockchain and kind of bring in the best and the brightest just in this space, because it kind of feels like we'd kind of neglect some of the other areas that we need to do. So, if we're running a project that's building a whole new bank, then, the skill sets that you need are pretty varied in there in terms of where we're going. I think the main thing that we kind of recruit for at the moment at 11FS is kind of very much cultural fit. And that seems strange to do, because it kind of feels like there's an expectation that everybody that you bring in should be 10x in terms of kind of what they're doing. We should start calling that 11x, shouldn't we? I guess that should be the bar of what we're doing. But yeah, I think the fit in the team is kind of the most critical thing. I actually had a really interesting conversation with Sharon O'Dear the other day. I'm not sure if you've met her before. She had this really interesting concept of jamming. The idea that you get a bunch of musicians together and they can just figure out how to play with one another, but that they all have to be at a similar level of skill sets in terms of doing things. Because if you get kind of an incredibly flamboyant guitar soloist who just completely wants to kind of take over and do everything themselves, that doesn't work out very well from the team. And I think that's what we're incredibly conscious of when we're trying to sort of pull people into what we're doing with 11FS is, having that kind of consistent respect for what other people have actually achieved. And that's definitely not something we're short of, really. I kind of think, I don't think I've worked in as highly a skilled a team as the one that I'm working in right now, which is, definitely saying something.
I'm interested in the high level of how banks should approach innovation. If a bank is currently lagging peers, what does it need to do to get started? presumably it's a mindset issue to start?
I think, for starters, as I've just said, really have a really good look at what your closest competitors are doing. There's so many organizations out there who have probably thought about the problems that you're struggling with, either within your geography in terms of your closest competitors, but actually much broader into, everybody's terrified of what, Alipay and, WeChat are doing on the other side of the planet, but most people have never seen them. Start with a very clear view of who's doing what that's interesting in the world. And I kind of don't mean a 6-month discovery phase with a design agency to figure out some pictures of something that you might want to copy. But definitely, I think there's something in there about stealing with pride. We talk about that a lot at 11FS is, remix the best what's out there and actually move that forward. I think at the point where you've got a clear view of, there is a group of companies out there that are doing things that we would want to do, but they're doing them better, then actually, depending on where they're doing it better will depend on actually how you approach the next step. So, if it's about the way in which they're making money and their business models in terms of what they're doing, then that takes a whole different set of leadership requirements to make that type of change happen. Because, you can have the best idea in a big banking organization, but if you don't have a path to get that in the hands of the customer, which, if we're talking about a change to how the fundamental pieces of the business model around current accounts works, then there's going to be a lot of people sticking spears on the side of that one. I think Caesar probably had it slightly easier than some of the innovative ideas that go through banks.
And when it comes to the actual technology that the incumbent banks are using and how that kind of does or doesn't limit some of the digital innovation they can be doing, can banks innovate using their current core systems, or do they need to rebuild from scratch?
Yeah, I think it's completely possible to do it. We've seen pretty good examples of there. People like mBank, obviously what Mikhail Panovich achieved at mBank with a core banking system that's older than me. So if you have the right people and they're properly motivated, I kind of think you get the best people in place and they're like MacGyver, right? You give them a paperclip and a rock and they'll probably fix some problems. So I think a lot of the times technology, similar to regulation, to be honest with you, is used as an excuse why we can't do things. And most of the time that's nonsense. So I would definitely, if you can unlock the power of the potential, as in the culture that could move these things forwards, that people are taking sort of personal ownership of actually how those things are being driven forwards, then technology is not an inhibitor for doing those things. There is always a way of getting that stuff through. Mostly, I think the leadership or the culture within the organizations is a much of a bigger inhibitor than technology.
You blog about how every bank wants to be innovative until they figure out what that means. Is that true? In my experience, definitely. I think the thing is, it's a difficult one because kind of innovation and fintech looks all quite fun and quite sexy, and it kind of feels like it's the fun end of banking in terms of kind of what people will really be sort of looking at doing. But at the point where actually you start kind of showing people what it takes to do it, very much the lateral I draw with this is into kind of exercise. I think I was watching X-Men last night, which sort of gives you a bit of an insight into my sort of weekend habits. And Hugh Jackman was like absolutely ripped in this movie in terms of what he was doing. And I know that if I spent pretty much like the rest of my life working out, I could kind of get to the point where I'd look like Hugh Jackman, right? But it's the realization that I would have to completely change everything that I do, completely change what I eat, completely change how much free time I have, kind of all of these excuses why I'm not going to do that in terms of where I'm going. And that's pretty much what you see with banks, right? It's kind of at the point where they realize they have to change their nutrition and do these exercises and 1,000 crunches in the morning to really be able to compete with the level of innovation that we see in other industries. It's really difficult. And the hard stuff, particularly when we're talking about the big scale cultural transformation pieces that need to happen, is you can't buy that. It's very difficult to fake it. It's really difficult to just buy cultural transformation, because if you were the leader of an organization, then you have to really be passionate about this stuff to make it happen. I think that's why when we see innovative leaders that are really driving change in their organizations,
they are relentless, right? And they believe it more than anybody in terms of those organizations, you know? I joke, cultural transformation is like fairies, right? If you don't believe in them, they don't exist. And, you know, very much if culture goes bad, it's really difficult to make it change. And that's where most of the big banks are at the moment. It's they're in a bad relationship with themselves, and it's really about how to, change that around.
We're in the midst of a wave of digital-only challenger banks. We've mentioned some of them before. Certainly that's the case in the UK, and I think to a lesser extent, other parts of the world. How do you define a digital bank?
I think that is a pretty tough question, to be honest. I think it's a difficult one because I guess we haven't really seen one yet. I can probably describe qualities of them, but at the point that we're at, I think we've definitely seen digitized banking. I don't think we've seen digital banking. I think we're getting there. You know, particularly Monzo for me is a really good example that if you take the qualities of digital in other industries, whether that be about how you humanize digital experiences or how you use data to ensure that you're enriching the experience, all of these things are qualities of digital executed very well in other industries that the guys at Monzo are bringing to banking. So while I'd struggle to kind of give you a kind of a word for word, this is the de facto go to my grave view of what digital banking or a digital bank actually is. I kind of think we're getting there, but maybe I'll know it when I see it. But again, I think similar to the 1% finish piece, I kind of think what is digital is continually evolving and changing. Digital 5 years ago wouldn't have included a definition that was using anything to deal with smart contracts or blockchain. Today it kind of does, because it kind of feels like to be truly digital, you need to be on the cusp of all of the latest and greatest innovations in terms of what you're doing. So I think while I can't give you a de facto answer, I think let's keep looking, and I'll tell you when I spot it.
We talk so much and we hear so much about the importance of digital banking and this kind of quantum leap from where we are in banking now to the near future, when everything's on a mobile and actually it's all integrated into the experiences that you otherwise have, and you actually don't even know you're banking because your banking is being done while you sleep. To what extent is society interested in that model of banking? And I'm absolutely sure that it's some percentage of people, but branches presumably still exist for a reason. People demand paper statements for a reason, and they deposit checks from time to time for a reason. And while these things are inevitably getting phased out, presumably there's still some segments of the population interested in traditional banking the way it has existed for some decades.
Sure, I definitely think that's that's the case. That there are people in society who will always need alternative to mainstream banking mechanisms. I think there's probably something in there to say that even the digital only banks that are coming through. My experience with Monzo is a good example here. Is I've never felt the type of warmth from a brand through digital mechanisms. Like if I'm using IM to actually answer a query or a problem, then actually they're kind of more human than humans in some instance in terms of what they're doing, because I can get a 30-second response whereas before I'd have to either spend at least 5 minutes, 10 minutes on an IVR to get to talk to somebody to answer a silly question, which almost kind of gets you to the point where you stop asking silly questions. And I think, if you think of any good relationship that you've got, whether it be from a personal perspective or from a business perspective, it's kind of predicated on communication. The minute you stop talking to somebody in a relationship is probably when the relationship's taking a bit of a turn for the worst. And I think we've all sort of stopped talking to our banks to a certain degree. We don't have the open means of dialogue to actually, can contact these people in the way that we want to contact them. If I want to send an SMS, or if I want to send an IM, or if I want to communicate via Twitter, it's very difficult to get that warmth from them in terms of kind of where they're actually sort of portraying their communications at the moment. I kind of feel like, is society ready for it? Well, arguably, digital channels and digital communication basis is done very well. for me are actually a much more inclusive way of doing financial services than needing to have a face-to-face communication with somebody. The mechanisms that I'm seeing being put in with various different challenger banks, for me, again, feel like much more inclusive than they would be exclusive. My mum's always been terrified of kind of mobile banking and internet banking, but a mechanism like being able to turn off her contactless payments on her card, that actually means she feels in control of when that's active and the fact that nobody's tapping her bum and stealing her money. Then if that's the type of controls that need to be put in place to really democratize digital services, then fantastic. Beyond that, actually we start to see things like chatbot interfaces or true going into voice capability to allow real machine interfaces that replicate what the best customer experience would actually be with a human. Then for me, at the point where you can just speak to a computer in the way that you would speak to a human and get a human response to that in terms of actually fixing your problems, then that feels like it's actually digital banking being made much more inclusive than it really ever has been. The first wave of mobile banking, when it was only the people with an iPhone with this version of the software and blah, 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 who could access it. Now, if anybody can talk to their bank as if they were talking to a person and get a personal response, then it feels a lot better to me than it ever would be.
That makes perfect sense. And I think what it sounds like is that it's actually less binary maybe than some people make it out to be, i.e. people are happy with banking and they're not going to switch to new banks, or as soon as a good new bank comes along, they immediately jump to 100% market share because suddenly banking is totally disrupted. It sounds like more than anything, new models, new players coming to market are accelerating that change from traditional banking to a more digitized.
I think definitely in the UK for sure. I think the UK is a very odd sort of territory at the moment in the nicest possible way. We've seen the regulator position chess pieces over the last 2 to 3 years that actually kind of lead us to this year. With everything that's happened with regards to the increasing of competition, the speed in which you can get a banking license, putting in place the elements around the things like the 7-day switching policies. All of these have been kind of chess moves to get us to the point where we are this year, with all of the new challenger banks coming to the market to offer the customer something very unique. We kind of start to move. We're speaking to Tom Blomfield from Monzo a couple of weeks ago on our show, and he said we're kind of moving away from bribing people to come and join us to giving them a service that they want, and that feels strange that it's kind of taken so many big significant movements in the regulators and the government and banks, and to actually start getting companies coming through that provide services to people that they really actually want to get. But I think that's where we're going. And to your point, I don't think, for the life of me, I don't believe, as much as I like what Ricky's doing at Tandem and Tom's doing at Monzo and whatnot, I don't for a second think that they're going to flick a switch and suddenly have 50% market penetration in terms of kind of what they're doing. But at the minute that you start to see a product come to the market with kind of real network effects, if every customer is telling 2 customers that actually you should check this out and you should see this service, and I'm starting to see that in the minds of my my normal friends, the ones that don't work in fintech, the actual kind of normal human beings who aren't tarnished by all of this stuff that we do day in and day out. Starting to see those guys getting excited about getting into the sort of Tandem alphas and the Monzo alphas and whatnot. Then I kind of think that's a real sort of tidal wave of change that actually, the real question is, looking outside the window of where we are today, will the big banks wake up quick enough to avoid the tidal wave, essentially.
Yeah. Before we go, I'd like to congratulate you on the exceptional work you and your colleagues at 11FS do on your podcast, Fintech Insider. I'd highly encourage everyone to check that out. So it's really great.
Thanks very much. We've been super busy over the last 6 months kind of leveling up the quality of the guests and leveling up the quality of the audio. Actually, I kind of I'm sure yourself, when you look back at the first few, you're like, wow, I kind of what was I? It's like that hairdo from the 80s or the 90s type thing, depending on your age group. But yeah, it's nice to keep leveling all those things up, and I'm sure similar experience to yourself. It's just fun having chats with fun people.
Yeah, well, look forward to your upcoming shows. David, what's the best way for people to find out more about your work and connect with you directly?
Sure. So you can find me on Twitter. So I'm at David Brear. Or if you want to keep up with what all the good folks at 11FS are doing, then it is www.11fs.co.uk.
David Brear, thank you very much for joining us today.
No problem.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.